no stress.
Yeah.
Hey, Kamal, very happy to have you on our podcast. Welcome to the podcast, and thank you for giving us your time.
Thanks, Abhay. Thanks for having me. It's been great knowing you for the last few months, and super happy to be here.
Great. So, Kamal, why don't you introduce yourself to our audience? Who's Kamal Gaur?
So I am just a regular Joe in India. I look at myself as a retail investor first, everything else second. I've been in the I've been associated with Bitcoin in different ways. Um, I think passively as an observer from 2013, but then actively as an investor since 2016, 2017. And yeah, I mean, I'm somebody who has been studying money, studying investing, studying uh, the markets, and I'm at a stage right now where I want to figure out what is the best way to add value to the world around us when it comes to money, especially.
Super. And Kamal, what's your Bitcoin story? How did 2013 is really early. So how 2013 happened, 2013 to 16, and then 16, did you take the crypto route? Share with us your story.
Sure. So 2013 is when I first heard of Bitcoin. And I remember there used to be a website called
Yeah.
Local Bitcoins, which was like a forum. And I managed to chance upon it. I had read a little bit about Bitcoin. It seemed very interesting. And I saw like this very easy arbitrage opportunity on local Bitcoins. So I could see there were people who were willing to buy for more and sell for
Really?
less. And I was like, yeah. And I was like, this doesn't make sense. This
Yeah.
is like free money. So I put my mobile number there as a buyer and a seller just to see, right, what happens. And I tried figuring out what a wallet was because everywhere I went online, they said you need a wallet, and I'm like, what is a wallet? I used to use a BlackBerry at the time, right? I wasn't even on Android, so I didn't know the Android ecosystem. I didn't understand what a wallet was, and then I left my number on those forums, and I forgot about it. A couple of months later, my phone started blowing up, and people are like, "Do you have Bitcoin? Do you have Bitcoin?" And at this price, and I was like, "No, I don't have anything," because I still hadn't figured out how to do it. And then I just logged in one day and I deleted those posts because I was like, I can't keep getting people calling me every day asking for Bitcoin. Looking back later, I realized that that was the time, I think Jan Feb 2013, that was the time when Bitcoin had started going up from $10. It had started going up towards, I think, 100 at that time. And people were calling me because they realized that there's this guy who's willing to sell it for some 500-600 rupees. So is he legit? And obviously, I was not legit because I didn't have any Bitcoin. Cut to 2016 November, um, Trump got elected.
Uh-huh.
And the day Trump got elected, for me, it was a big surprise. And I thought it would be a big surprise for a lot of people. So I thought, okay, if money needs to go, if it needs to leave the US, where would it go? And I thought Bitcoin could be one of those places where it could go. So I remember, I think I bought a little bit on on 8th of
Okay.
November and expecting the price to go up. And the next day it went down. And I was like, this is not supposed to happen, right? Uh, so I just like put a sale trade to just sell it at no profit, no loss. And I forgot about it. I log in later to see that 3 days later I sold for like barely any break even. Cut to May 2017. And that's when it came on my radar again. And that was the time, I think it was shooting past 1,000, it was heading to 1,500, and then it was going all the way up. uh, so that time I was like, you know what, third time's a charm. I think I should pay attention to this. because I have a feeling I will regret it if I don't. So I got in, started spending time, started like putting in time, effort, money, all of that since 2017 has been my journey. And in terms of Bitcoin, my for the last 8.5 years, I would think that I have largely known how it has moved, because on an almost daily basis, I've seen the price, I've lived the price for 8.5 years, and my Google feed has helped me stay abreast of all the kind of news that is happening, not only in India but around the world as well. So that's been my journey. It actually is parallel to my journey of fiat investing as well, because I think 2017 was the time when I actually got a little serious about my own
Got it.
finances. Because till then I was earning, I was spending, I was saving, but I don't think I was really investing till that. So it's interesting for me that journey has happened in parallel. It's been the Bitcoin crypto journey as well as the traditional fiat mutual funds equity journey. So it's been interesting.
Excellent. That's such a fascinating journey and a story. So, what does Bitcoin mean to you, Kamal, today in 2025? We are sitting in December 2025. So, what does it mean to you today?
It means a lot of things, right? But I think for the vast majority of people, I think it means uh, that it is an asset class that they should pay attention to. And not because I'm saying it, not because you are saying it, but because it has been in existence for 16 years. And there are hundreds of millions of people around the world who see value, right? I think for somebody who uh, doesn't get convinced, no amount of time is enough to make them see the light. But I think most people are rational, most people are reasonable, and if they were to take out 10 hours and just go down the rabbit hole of Bitcoin, and they can just start with ChatGPT, they can just ask a question, get an answer, ask a follow-up question, get another answer, and keep doing that. um, and if they let their curiosity take over and they read up on all the different threads that come up, I think they will start seeing what we see and what we've seen for a while.
Excellent. I think this is the first time I've heard about just put ask ChatGPT. Most of the times, people come up with saying, "Hey, start with Bitcoin Standard, start with this and that," or a blog post. But this is amazing. I think this is just the right. Most of the times, when we are trying to discover any topic, the easiest tool today is to put it on a ChatGPT or whatever AI software that you use, Claude, anything that you like, and just ask the question of what is Bitcoin, why are people buying Bitcoin, or any other question, and just follow your curiosity and questioning on that.
Yeah, yeah, no, absolutely. Because I've realized that um, everyone starts from a different point, has different sets of questions, and I think you must have done it. I know I've done it. We've spent innumerable hours sitting with individuals, with groups of people, trying to explain, and yeah, I mean, I don't think any human being can do it as
Yeah,
effectively as ChatGPT, right? And saves time, and people can do it
yeah,
at their own
yeah,
pace,
yeah.
so that's fine. As long as people see, I think one challenge that I see is people don't take
Mm,
the time to understand the world of money, what works, what doesn't work, why it doesn't work. They don't take the time. I think they are very happy being either lazy about it, or a little scared about it, or just believing that it's too complicated for me to do it, so I will have a professional
yeah,
do it for me. And I think those are challenges that need to be addressed. But you can't do it for anyone else. People have to decide to do it for themselves. Your desire to learn has to come from
yeah.
you. There's nothing anyone else
Yeah,
can do
I
about
think that's so true. I was just so. I have a teenage boy, and he was discovering money, and I gave him this book, Psychology of Money. And one of the, I think the first chapters of that book, it's still, and I was flipping through it before giving it to him, and I think one of it, the first chapter says that most of us are emotional about money, and we know 0.009% of what money is, but we make 80% of our decision with that information. And that's when I read that, I thought that's so true, because if I believe that Bitcoin or crypto or whatever is a Ponzi scheme, then I have made that decision. I've just taken the decision and then moved ahead, and then assumed it to be true. So yeah, it is just being curious, and uh, being open to learn, and being open to say, hey, I can learn something, could be a very important aspect of learning Bitcoin.
Yeah, true. No, that's a great book. I remember reading it, I think about 4 years ago, and it's just filled with
Yeah,
gems, right? And it just, I mean, if you get psychology of money, and if you can see yourself aligning to it, you're well on your way to getting better with
yeah.
money. So I think it's a great book to give your
Thank
son.
you. So you wrote this article, and I'm reading from the screen, which says,
Yeah,
"Understanding market cycles: Why human behaviors shape everything." And when you understand the rhythm, the noise stops controlling you. So, talk a little more about this. What prompted you to write? What is the message you want to share? And what prompted you to write this? And then what's this article about?
sure, sure. So, like I said earlier, right? I think one of the things that we need to solve for as individuals and as a collective is how do we get better with money? I think a lot of people see money is important in today's world. We live in a capitalistic model in most countries, right? Money has a direct correlation with the
Yeah.
quality of life. That said, not a lot of people spend a lot of time thinking about money, understanding money, right? So one of the things that I'm now doing is I am writing, and basically there's a platform that I've created called zenka.global, and that's a space for me to write about things which I believe people need to understand better. And it's just been a couple of months. There are a few topics already out there. They're more in the pipeline. One of those was this topic around market cycles. And what I wanted to say was that if you actually zoom out, market cycles repeat, and they repeat in on all financial markets, and they repeat in on all financial classes, and it's only when you zoom out do you see that it has a rhythm, right? And there are differences in cycles in terms of the volatility, or in terms of the time period, uh, or in terms of the speed at which things turn, but the cycle is the same. And I'm not saying this, I mean, I am taking this from people who have studied this, who have written about this. And there's a cycle, and the reason there's a cycle is because all financial markets that at least we operate in are all human driven
Mm.
markets, right? There's a reason why prices don't move on the weekends for equity markets. That's because the markets are closed and nobody is buying and selling. The prices only move when human beings participate. And human beings, when you see human beings collectively participate in a market, and by market cycles, I refer to different markets. So you would have a market cycle is applicable to the market and the people who participate
Okay.
in that market. So, in the case of Bitcoin, for example, it would be a global market because it is a global uh,
Asset. Yeah.
asset that can be freely traded 24/7. In the case of equities, the market would be a national market, right? The Indian equity market or the US. So the market cycles are a reflection of the people who participate in that. And if you look at, for example, real estate, there is no national
Hmm.
real estate market, right? It's a
Yeah.
domestic one. It's usually located
Yeah.
to the
Bangalore
city
real estate or
that you
Mumbai real
reside.
estate or whatever. Yeah.
Correct. Correct. So, what you see over time is that markets breathe in cycles, and there is a very simple four-stage sort of an evolution of markets, and it repeats and it repeats and it repeats. What changes is uh, how long it takes. And I think you can only see that if you observe multiple markets over long periods of time, or you just decide to zoom out a little bit, right? Instead of looking at prices today and last week and last month, you zoom out not in weeks and months, but in years and decades. And you will start seeing that markets go through the same set of changes, which are a reflection of changes that happen in the collective belief of the people who are in that
So
market.
let's talk about the Bitcoin market and to and today, 18th of or 19th of December, that the day we are recording, 2025, the markets, as in the Bitcoin price, is closer to $85,000, and many people have their own theories about market cycles and Fourier cycles. So, can you help us apply the four stages into the Bitcoin market cycle, and where do you see today the Bitcoin market is, and who are the participants, and what do you how do we kind of interpret today's price, and then what can we take away from going forward? Where do we see this market based on the cycle theory going forward?
Great question. In terms of where I think we are in the market, if one were to look at the 4 year cycle, which is what we have seen at least the last two, three cycles, right? Which is the last 8 to 12 years. Um there are people who will believe that we are in the markup phase, right? We are on the way up, and the peak is yet to come, right? And there will be a peak at some point in the future, after which there will be distribution, and then so yeah, right after this, let's get into what those
Yeah,
four
yeah.
stages are. But yeah, but there are people who believe that we still have a bunch of
Hmm.
headroom to grow. So from that point of view, one could say that we are in the markup phase, which is the second phase, which is optimism, where you are believing that it is going to go up. Uh, However, there are also other people who believe that the 4 year cycle
Hmm.
is dead. And because Bitcoin has already more than doubled in terms of the price. So last year, I think in May, the price was
Yeah,
around 55, $60,000. And then in December, I think it
yeah.
crossed 100K. A couple of months ago, it touched 126K. Now we're back to 85,000. So there are people who believe that the peak was
126.
126K, and we are on the way down, and this will bottom out a little bit more. And that's those are the two competing views. um, I think it's difficult to know for sure what that is. I think it's only after enough time has passed and we are able to zoom out and look at what happened between 2021 and 2025 and 2028 for us to see whether the same 4 year cycles happened, or did it evolve into a different duration of a cycle, whether it was a 5 year, 6 year, a flatter cycle. That is something that only time will tell. But yeah, this is what I think right now.
So,
Uh,
why don't you
Sorry.
help our viewers see the four stages of the cycle? Help us explain the four stages, and then, if possible, try and see if we can apply that to your understanding of Bitcoin and the cycle
Sure,
overlap of these stages in the Bitcoin price.
sure. So, in terms of the stages that are being talked about most commonly, there are four stages. One is called accumulation. This happens when, after a crash has happened, right, and prices are extremely low. that is when accumulation starts happening, which means there are people who are entrants in that market who decide to start buying, right? Because they believe that this is the beginning of the
Got
next
it.
cycle. So they accumulate, and this happens usually at the bottom of the previous cycle. In terms of emotions, you could say that this is the beginning or the glimmerings of hope, right? Where people think, you know, it can't get any worse, it only has to get better, and there is some hope, and then that's the emotion involved. Now, as more and more people buy, prices go
Yeah.
up, right? As prices start going up, there is a certain amount of momentum that starts happening, and you could call this also as optimism in terms of the emotion, or the phase that is talked about as part of the four cycles is the markup phase when prices are going up. What happens after that is, as prices keep going up, there is a point at which you don't have enough and more buying power for the prices to keep going up endlessly, right? And at that point, you see this thing which is known as distribution, or which is like the peak, which is when people start um, selling as well as buying, and it peaks at a point where you have the selling pressure also rising to an extent to match the buying pressure, so then the prices level out at a certain height, right? And uh, depending on if you're on the buying side, usually the emotion you can associate with this is euphoria, because this is the peak that you have seen, and it's usually, in the case of markets, it's far higher than what one would reasonably expect. And then as prices start leveling off at the same level, and they don't go up and they don't go down, and maybe there's a small dip or something, the emotion that starts coming in, I believe, is what you can refer to as doubt, right? So there are people now who start doubting that, you know, this market is not going to keep going up, and maybe it's hit its peak and it's going to start going down. And then as selling pressure goes up, which means there's more selling pressure, um, prices start going down. And as prices start going down and there is not enough buying pressure to keep the prices up, you start seeing fear and panic, right? And um, like euphoria, like fear, it feeds on itself, right? And this is more of a sentiment, this is more of a collective belief, which you will find in all the participants, or most of the active participants in that market. So everyone's optimistic when prices are going up, everyone's pessimistic when prices are going down. And that pessimism feeds on itself, and people keep selling, not enough people are buying. And when that happens, prices keep going down, and then they bottom out to what is, and then the phase is called the markdown phase. And then you bottom out at the new bottom, and which again, from an emotion point of view, you can refer to it as despair, right? Because that's the worst that could have happened, because you've fallen from the peak and gone down to the bottom. So this cycle keeps repeating. We don't see it because we don't look for it. I think most people maybe know about 10 stocks, 15 stocks. They maybe know two data points, three data points of what the price is today, what it was last week or last month or last year. And through that, it's almost impossible to figure out what is happening. The other thing I want to call out clearly here is that when I talk about market cycles, I'm talking about an asset class for a set of people. I don't want people to conflate that with the cyclicity that you might see in an individual asset or an individual
Mhm.
stock, right? Because individual assets can have a life of their own, right? There could be some which have the tailwinds behind them or headwinds, and they might follow a very different cycle. I'm referring to the collective engagement or the collective emotion that a set of people have with a certain asset class and how it affects prices over the long
Got
term.
it.
So, yeah. Uh, the other reason I think why people don't get this is because it's very easy to see this
Hmm.
in crypto. And in fact, I'm fortunate to have seen it for the last 8 years, and I've been able to see two cycles fully. Um, in the case of equities, in most countries, I think including India, it's a 7 to 10 year cycle. In terms of commodities, it's higher. It's maybe close to 15 years. Real estate, again, is 10 plus years, right? So people aren't paying
Yeah.
attention for 10, 15 years to see one full cycle repeat itself and then see a second one happen again for them to confirm that yes, this
Yeah.
is what's
Yeah.
happening. So I think that way it's great to see a 4 year cycle in Bitcoin. It teaches you that there are cycles and you can see it like on accelerated mode 24/7 non-stop. And then once you see it, you start seeing that this is similar across all asset
Okay,
classes.
great. So the four stages, if we were to apply this in the last cycle of Bitcoin, likely about quarter four of 2022, November, December, we were about, I think, in the range of sub $20,000. So that might have been
17.
the accumulation stage where people said, okay, fine, it's been going down for some time. It's really, really down. Some people would have started accumulating, and there would have been hope saying it started moving up a little bit. Then as that moved from 20, 25, 30, 35K, it would have turned into the markup phase, optimism. People was talking about saying, hey, how could it kind of expand with then the ETF getting approved in January of 2024, and then Trump getting elected in November of 2024. And that would have led to, likely, assuming this cycle is that cycle on peak and distribution of 126, which was October, and then the markdown, which potentially is 85. Now, no one knows whether this is the markdown or this is a blip, and the peak or distribution is maybe beyond 150, or so. Is that, would that be a fair assessment, or would you want to add, subtract
Yes.
something from that?
No, a very fair assessment. And one thing to call out, I think it's important, is um, even when we say there's a cycle, which is four phases over 4 years, 7 years, 10 years, whatever is the time period, it is not one straight line. It never is, right? So if you zoom in, you will see those peaks and troughs, peaks and troughs, peaks and troughs that will keep happening. And we could very well be in, say, the trough of what will end up being a bigger peak, or
Yeah,
vice versa, right? Based on where we are. So I think zooming out helps quite a bit. And I think that's one thing to remember. You cannot look at daily, weekly, monthly price movements and say that it's been going down for 2 months, and so it's going to keep going down, because in the larger scheme of things, it might as well
got
go
it.
up,
And
or vice
then
versa.
you talked about the tenor of the cycle or the time period, and each, like you were talking about, equities could have a different time frame for these cycles. Real estate could have a different time frame. So people generally in Bitcoin have been talking about this 4 year cycle, and now there's this like new thought process saying, oh, the cycles were never 4 year. It was something else which was construed as cycle. It was more of correlation, which kind of became self-fulfilling causation, maybe, at least in hindsight. So, what's your thought on that? Have you given some thought to it? Do you think it is a 4 year cycle, and this is likely the fourth part of the 4 year cycle, or you have some other thoughts?
So the way I see it, right? I mean, I think the first cycle showed me a set of data points. Um, I remember getting in thinking, this will never stop. and then it hit 19,000, 20,000, then it crashed to 11,000. uh, then in the second cycle, it was at three and a half, 4,000, $5,000. And I thought, um, it will go up, but
Yeah.
how
Yeah.
much will it go up, right? How much do you expect? And then it went up to $69,000. So every cycle, I update my mental model as to what it can do, what Bitcoin can do. So I'm not assuming anything, right? I think time will tell us where we are in the cycle. Uh, in terms of cycles, I think a lot of people say that. So I think somebody said uh, retail is not going to
Yeah.
be in the cycle, or
Yeah.
some such, right? This is not a cycle for retail. I think so. I'll go out on a limb and I'll say this. I think I don't necessarily agree with that, because I think a cycle is not a cycle if not everyone is involved, right? So if retail hasn't gotten involved the way it usually has in previous cycles, I don't think we can say the cycle is
Got
done,
it.
right? I think because of the fact that this is a human driven, emotion driven behavior, which reflects as market cycles in terms of prices, I think if you have a large chunk of people who are sitting out, I don't think a cycle starts and ends without them. So I do believe that retail will come. When it comes, in what form it comes, how much it comes, remains to be seen. But yeah, I think that's likely to happen before we can call it the end of this cycle. Yeah,
Yeah.
let's see. I don't think there's any level of despair right now in Bitcoin, right? I mean, $85,000, people aren't like losing their minds and saying,
The
"Oh, this
index
is
says extreme
like
fear
going
and
to be."
greed.
So
So,
yes, you're right. The
yeah.
alternative.me thing says extreme fear, but I don't think it's there. When you speak to people, when you see the news, I don't think that level of despair is there right now.
Yeah.
So let's see. I think it'll be interesting
Little
to see
bit
how it
pushback
plays
on the retail piece. Some people say that the kind of money which is needed to move a $2 trillion asset is different than what is needed if you are a 200 billion asset or a 500 billion asset. So, does retail even have that kind of capital? And would you need institutions and BlackRock and passive capital and sovereign wealth funds to come in? Not because, or not only because Bitcoin is very valuable for those participants, and the game theory of each participant discovers Bitcoin and then participates, but without that participation, $2 trillion asset moving to even $4 trillion, doubling from here would need a lot more capital, and that is the most common argument that I have heard of why retail might not be the set of participants who can really move this market anymore. Any thoughts on that?
That's interesting. That's interesting. I haven't heard that from a capital um point of view in terms of the money that people can bring. That said, since prices are set at the margin, right? You don't need, for example, $100 billion to move the market cap by 100 billion, right? You maybe need 1 billion or 2 billion, and then the market cap can move because uh, the actual money going in only changes the price of the last traded asset. And if that price changes, the overall value of everything goes up. So if 1% of your supply goes from 85,000 to 90,000, for example, then everything is worth 90,000. So it has lifted the remaining 99% of supply, which was not bought or sold, but the price has gone up. So yeah, I think there are many competing explanations for uh, where we are and where we are headed.
Yeah.
uh, my personal take is that I think we will see retail
Got it.
at some
Can
point.
you explain a little more of what is prices at the margin, or prices are set by buyers or sellers at the margin, and also
Sure.
in the context of Bitcoin being a fixed supply asset, so compared to any other asset or commodity, if prices go up, then more supply can come into the market. So if you can marry those two and help the audience understand both the concept of why prices are set on the margin, and then why 21 million Bitcoin fixed supply could impact that price is set on the margin with a small amount of capital and might not need hundreds of billions of dollars to move the price.
Sure. So when I say prices are set at the margin, what I mean is that, say you have a stock which is, say it's Bitcoin, right? Say it's $100,000, which at 100% of the supply is $2.1 trillion, because it's 21 million is the supply. Now, what happens is, price is nothing but the last trade, the last price at which a buyer and a seller agreed to have that transaction. So if that happened at $100,000, that's the price. Now, imagine that the next transaction happened where you had a buyer who was willing to buy at $101,000, and there was a seller who was willing to sell it at that price. The minute that transaction happens at $101,000, that price moves to $101,000. So that transaction might be worth, say, $1 million, right? But the impact that it has had on the entire
Yeah,
market cap is that it has gone up by, say, 100-fold, um, or actually even more, right? So price being set at the margin just means, and this is the same thing that we see in the market cap metric for companies. If you say that a certain company is worth 100 lakh crores, it doesn't mean that there are 100 lakh crore rupees that have been given to that company or are in control of that company, and they are sitting on that pile of cash. All it means is the number of outstanding shares into the latest market price is equal to a certain market
yeah,
capitalization. So even in this case, prices are set at the margin. It is only the latest price that determines the value of the entire supply. And that is what I mean by prices being. So you don't need a lot of money to move the price, to move the market
correct.
cap, right? You might need a certain amount of money to move the price, but the minute you move the price, the market cap follows
Correct,
automatically.
correct. And yeah, as you rightly called out, that prices are set at the margin, and specifically in Bitcoin, because the supply is fixed from a total supply is fixed at 21 million. There will be supply which will get unlocked from people willing to sell if the price goes to a particular amount. So, if example, I have some Bitcoin, and if Bitcoin price goes to $1 million, then whether I get motivated to sell some part of my Bitcoin is as prices go up, more supply could get unlocked. But the total supply cannot increase, and then there are holders like who are holding for like perpetuity, almost like illiquid supply. Think of Michael Saylor on strategy side, or all the other kind of strategy like companies, and some of the uh, passive ETF flows, which are like by institutions which are holding for the long term. Example, the Harvard Fund is holding, I think, if my memory serves me right, about $500 million of Bitcoin. So those are more inelastic supplies. I'm sure at some price, some of that supply can also come in. So at a fixed supply asset compared to other commodities or products, both financial products and commodities, if more price goes up, then new supply can enter. Here, new existing supply, the sellers could be motivated to sell and diversify or use that cash to upgrade their lifestyle or something. but the fixed 21 million is the other constraint, which I think has not
Yeah,
yet been tested because this is the first fixed supply financial asset which we've, at least in my experience and my knowledge, that we've come to interact with. So there will be some models and new PhDs and new Nobels which will need to be written once that price action takes place.
yeah, yeah. No, and you brought up a very good point. In the Bitcoin standard, also, right? He talks about the fact that why gold compared to, say, other asset classes ends up outperforming. And what does he mean when he says that gold is
Yeah,
a hard asset, right? And similarly, Bitcoin is also a hard asset. Now, the definition of hard is that no matter the price, right? Can actors who are incentivized to increase the supply, can they increase the
yeah,
supply or not, right? And what happens in that is, in a hard asset, whether so in the case of Bitcoin it's determined by code. In the case of gold, I believe, no matter how much equipment or effort is put in, I don't think the supply can go up beyond 2 or
yeah,
3% a year, right? Any other asset, which is not a hard asset, what happens in the market is, if the price goes up, it incentivizes the manufacturers of that, the extractors of that, to extract more, so that they are able to use that extra supply and sell
at the
it
higher price.
for
Yeah,
a profit, for a tidy profit. And the minute the supply goes up, uh, the prices start correcting and the prices
yeah,
come back down, right? So that appreciation that you see of a hard asset over time, uh, you will see that it will outperform any other asset, monetary asset, which is not as hard, because the supply is something which can be influenced, can be controlled. The minute human beings can't control it beyond a small 2-3% is when you actually start seeing the impact of that hardness in
okay.
price
Coming back
appreciation.
to your article, what do you mean when you say, when you understand the rhythm, and I'm reading from the screen next, the noise stops controlling you. So what's the noise and what's the control factor of the noise?
Like what we were just saying, right? Last couple of months, we've seen the price go from $126,000 to $85,000, and we don't know where it's going to go next. I think in the short term, everything is noise, right? And this is more of a trader versus investor mindset as well. Traders live for the noise, they love the noise, and they get into the weeds, and then they like uh, snipe and do all those things. But if you're an investor, which I think a lot of people can be and should be, because I think investing is easier, it is less, you can do other things in life, you don't have to be glued to your screen. So if you're an investor, anything short term is
Yeah,
noise, right? So a cycle helps you zoom out, and when you're zooming out, and if you see 4 years on a screen, you can see the cycle and what uh, sense it makes. But the minute you zoom in and you see that there were like 6 months in which it kept going up and down every week, that is
yeah.
noise. So cycles help. Once you understand cycles, it helps you tune out the day to day, week
Yeah,
to week
yeah. I think
noise.
I remember this. Someone had posted this meme, when in doubt, zoom out. So that stuck with me. So, and I guess what that person meant was try and see the big picture, try and understand the cycle. And as you're rightly saying, that if you zoom out, effectively you're saying that, hey, if you take a long enough time period, has this happened multiple times, and is there a pattern? And because this is effectively a reflection of human behavior is in term cyclical in some pattern, and if you're seeing that pattern, then the likelihood of if you're looking at the data from a longer period of time, the likelihood of your pattern recognition brain recognizing that pattern might be higher, versus if you're super zoomed in for 1 week and saying, oh, this is super crazy, it goes to 95 and comes back to 85, and I don't know what's happening, this is too crazy.
No, and forget a week. You zoom into a day. You zoom into a 6 hour window, an hour window. You can zoom in all the way
Yeah,
to 1 minute, right? And it's not
yeah,
flat. It's not one straight line. At 1 minute, also it keeps
yeah,
going up and down. At 5 minutes, also it's moving like that. So you can get really sucked in if you let yourself. But I think for most people, the healthy balance is to zoom out and to see how things happen. One thing I want to call out in this is, even though cycles are human and cycles repeat and cycles are similar in many ways, it is very important for people to only participate in markets where they understand the asset
mm,
class, right? They should not just jump into any asset class, um, thinking that this is a great time to enter that asset class, because every asset class has its own nuances, its own strengths, its own shortcomings, and it becomes important that you have that deep understanding, you have that deep conviction. And I say this to a lot of people, I say this to people I speak to. My conviction will only last you so long. You have to build your own conviction on any
yeah,
given asset class, right? And you can borrow my conviction, it'll work great when prices are going up. But when prices don't and the market turns, um, you will need your
yeah,
own conviction. So everyone has to build it. I'm not saying that we should have conviction on all asset classes. Far from it. I don't think too many people are like that. Even I'm not like that. But the ones that you are investing in seriously, do the research, have build that conviction, zoom out, and
yeah.
yeah, just
Yeah,
just
I would just
understand how
add
it
one
works.
more caveat to this generally is that, especially for Bitcoin, what happens is because the general media noise around it is more negative, at least in the Indian context. So uh, getting off zero is extremely important in my mind. So, what I generally kind of recommend is do an allocation, 1 or 2% or whatever you're comfortable with. Maybe 1 lakh, 2 lakh, whatever, $1,000, $2,000. Just do that allocation and then keep studying it, because unless you study it, you will not uh, either prove or disprove yourself. And if you've not done an allocation, then you will not study it. So it'll become a self fulfilling kind of prophecy. So do a small allocation, get off zero, then spend the time. It will naturally, the price movements will make you more inquisitive. Your feed will start coming in with that. And that way you will get educated and you will either increase, decrease, and you can exit any asset class any point of time that you choose to. And especially with Bitcoin, as you were rightly pointing out, that someone exited with 90,000 bitcoins, $9 billion, and the price just moved whatever 3, 4, 5% at that point of time, a couple of months ago. So that's a deep enough market. And if you're doing a small allocation, think of it like cost of learning, and just allocate a small amount, keep learning about it. But fully agree with you that developing your own instinct, own confidence, and own conviction is extremely important to have a point of view which either you keep doubling down or you say, oh, this is not my cup of tea.
Yeah, yeah. No, you're right. I think there is no better way to understand and learn and internalize those learnings than to do it yourself and to like have some skin in the game, right? Because I think that is what changes it from being
Correct.
academic to becoming real, right? And the minute it's real, we start paying attention, and then if we pay enough attention and we are observant and we do our research, I think yes, some of these things can be lifelong
Yeah.
learnings for everyone.
Yeah. Anything else on the article, Kamal, that you would want to touch upon?
I think one last thing that I would a couple of things I would actually say, right? One, a lot of people think that okay, the market has crashed. Why are prices still
Hmm.
high, right? why are they not lower than what I have seen in the past? And I think the reason for that is, if you look at any growing asset class where you have more and more participation over a longer period of time, prices are not going to come down to earlier levels, right? Even in the case of equity, for example, in March 2020, when COVID happened, I think the Nifty was what,
Yeah.
eight
Yeah.
9,000, right? And then it's gone up and down, and there have been corrections and all of that. We're now at 25,
Yeah.
26,000, right? Tomorrow, if a crash happens, I don't know what that number will be, but it's not going to go back to
Yeah.
8, 9,000, because so what people need to remember is, even though you have those four cycles, uh, even after the markdown phase, the new bottom is going to be a higher bottom, right? So in all these asset classes which are here to stay, which will sustain, it's not a one cycle sort of asset class, you will have higher highs and higher lows over time. So that's one important thing for people to remember. There was another thing, um, which is um, in terms of cycles. I think a lot of people approach it with their own expectations of
Hmm.
timelines, and um, their expectations can come from their own life requirements, right? And they can say, I have a plan to do this in 5 years, and I need to do this in 10 years, and all of those things. And they end up im- expecting that markets will behave as per their
Yeah.
expectations in as much time. So they might expect that, I can get X% in equity in the next 3 years because they need it. But
Don't care
cycles
about your
cycles
requirement.
don't care about anything, right? So it's important for you to um, not get into situations where you really need something to happen by a certain time. And if you do, then please make sure that your time horizon is enough to accommodate the swings of a cycle. And there is no formula to this. It's not like it will happen exactly at 3 months or 2 years, right? It's a collective set of behavior, and that changes with social media, that changes with news, all of that. So it's very um difficult to
Yeah.
pinpoint. So it's important for people to just remember that your cycle length should determine your
Yeah.
patience. It should not be that your patience levels determine what you think the cycle
Correct.
should
Yeah,
be.
that's a very important point. So, Kamal, one thing more that I wanted to talk about. You are from the most premier, prestigious institute from an alma mater perspective. I'm Ahmedabad, dream institute for anyone to be. So, amongst your friends and colleagues, how popular are you about Bitcoin, and what is their thought about in general, perception about uh, uh, Bitcoin in general, and whether you've been able to have conversations, and what feedback do you get from those smart people, the best of class that India has produced?
It's a great question. I think in terms of the people I know who know me, I think I would say that I'm somebody that they would speak to if something Bitcoin slash crypto comes up. In terms of opportunities to speak to batchmates, we have a WhatsApp group where we share information. I We've done Zoom calls in which we've had these. And like any set of individuals, right? You will have people who are on both sides of the spectrum, and you will have a bunch of people who are in the middle. So yes, there are people who see it for what it is. There are people who don't. and
What's
there
the
are
general
people
sentiment?
somewhere in between.
Is it like 70% of people think that, oh, I'm wasting my time with Kamal, or 70% people say, oh, wow, I had this huge opportunity with Kamal? So that'll be an interesting piece if you can share of what do you think is generally the perception about this asset class, at least in the in the segment or set of people that you hang around with.
So I'm also on a couple of other alumni groups, not necessarily my batch, right? And again, in that, right, what you will see in most human groups, again, right, especially WhatsApp, is that you have a very small vocal minority, right? And that minority could be for a certain
Yeah,
point of view or against a certain point of view. And then you have the vast majority who is
yeah.
silent. And it's very difficult for one to gauge whether they are paying attention, they are not paying attention, they are moving away from the point of view or against it. Becomes a little difficult. But yes, I mean, the people who are interested and who I do speak to, I think there are more and more people who see Bitcoin for what it is, and I think that's likely to continue happening, right? Because as time goes by, you more and more people are becoming are understanding Bitcoin. It's not that people who understand Bitcoin, as time goes by, they stop understanding it, right? So that graph of people who understand Bitcoin is up and to the right, and I think that's likely to continue.
Okay, so before we close, Kamal, what would be your advice for someone who's like a successful person from a socioeconomic standard perspective? That person got very good education, went to a elite engineering school, medical school, or became a chartered accountant, and then went on to work for a large corporate Indian multinational, lives in a large metro, has a very good lifestyle. The society considers him or her successful. He lives in a very good, like a owns or is renting or owning a house or buying a property, has a good car, does some foreign vacation once in a while. Uh, but he or she is totally only into stocks, equities, and real estate, and has ignored or is in the fringe of Bitcoin. What would be your advice to that person related to Bitcoin?
I think I think the best thing one can tell anyone is um, that they need to understand, or they need to have the curiosity to understand what is it that the world sees that they
But
don't
my
see
life is
yet,
very comfortable.
right?
I am living a great life. I'm doing very well at work, and why should I care about something which is so volatile, so risky? Most people call it a Ponzi scheme, and I'm just waiting for it to. I know it'll just wither away or die, and many people will lose money with it. So that's the general sentiment I have. So why should I be? You are saying I should be curious about it, but I think I'm saving my time by not spending or wasting it in that, versus trying to spend that same amount of time on finding the next real estate or the next stock which could perform like Nvidia.
Okay, so I'll go back to what we were talking about earlier, right? I think the persona that you're describing is a persona which is zoomed in, and which is zoomed in to say a nation state or a domestic or a local level. And the same advice that we've talked about when it comes to cycles is what one would tell this person to do, which is to zoom out, right? And zoom out, and zoom out outside of your city, outside of your country, look at the larger world, understand what is happening, understand why it's happening, understand where it's likely headed. Uh, and then once you understand it, you take an educated guess, right? It doesn't have to be for everyone. The volatility is nothing to laugh at. right? 30% drawdowns, uh, going up to even higher, um, can be unsettling for a lot of people who don't understand the market, or who have a very low risk appetite. But um, it's fine for you to not do it if you don't, if you understand it and you don't want to. But I think we all owe it to ourselves, living in this world which is globally connected. We are global citizens, world citizens. I think we owe it to ourselves to give enough time to understand, and then take that decision for ourselves, um, keeping in mind the larger scheme of
Oh,
things.
that's very well put, Kamal. Thank you so much for your time, your advice, and the cycle theory. I think I will just reiterate and repeat. So when in doubt, zoom out. And is there any place, Kamal, that people they want to connect with you can reach out? We'll put them in the show notes, but if you want to call out, that'll be great for our audience as well.
Sure. So I think Zenka.global is where I write about money, about our relationship with money. I talk about not only the Bitcoin crypto side of things, but also the traditional fiat side of things. Uh, Talk about how the fiat system is in India, what is our relationship with money, stuff like that. So I think that's a great place to start. Otherwise, on socials, on LinkedIn, on other places, I think it's fairly easy to find me, so people can just reach out.
Thank you so much, Kamal, once again for your time. Really appreciate your time for such a enlightening conversation on market cycles. So thank you.
Thanks, Avai.
This is educational content, not financial, investment, tax, or legal advice. The perspectives and frameworks shared are meant to help you think clearly. Your decisions are your own. Please think independently and do your own research.